Welcome to Illuminati Silver. We tell her the truth about silver. Today is Saturday, the 22nd of June, 2024. We're publishing our gold and silver weekly update for the week ending the 21st of June. Gold and silver were almost unchanged last week, with prices very slightly lower than the previous week. Spreads were a little tighter than recently too. The fall off on Friday could be a little concerning, however. So let's look at the analysis and see what's happened and what we believe is going to happen this coming week. Firstly, just a quick reminder, we've set up a second channel entitled Finances Do Matter, covering a whole array of financial topics. We're changing the guise of that channel in that there is going to be a slightly different production for it, and we'll tell you more about that once you have popped on over and subscribed to it. We've placed links to it both in the description box and comment section below. Now, let's go back to precious metals. Gold fell $11 last week, falling from $2,333 to $2,322, having hit a high of 2,369 and a low of 2,307, a fall of 0.5%. Gold spread between high and low was $62. Last weekend we said gold would trade between $2,280 and $2,400, and it did this quite comfortably, closing well within this range. In sterling terms, gold finished the week at £1,838, that's down £4, and in euros it was down €13 at €2,173. Now silver fell just 5 cents. Falling from $29.60 to $29.55, having been as high as $30.95 and as low as $28.96, a fall of 0.2%. Difference between its high and low was $1.99. Compare that with the previous week's difference of $3.41. Now last week we predicted silver will trade between $28.50 and $31.50, which it did very comfortably. In fact, our spread was too wide. Internally, we honestly thought it was more than likely to trade between $29 and $31, but we had to give it a slight edge because of some of the data that was coming out. We're so pleased that our pricing model is still as successful today as it has been in previous years. In sterling terms, silver closed up 2 pence at £23.40, and in euros it closed down 0.05 euros at 27.67 euros. The gold to silver ratio fell very marginally from 78.8 to 1 to 78.6 to 1. Bitcoin at the time of producing this stands at $64,286, down $1,955. That's now a $5,000 fall in the past 2 weeks. Equities, though, were higher. Dow Jones up 561 points at 39,150. The S&P 500 up 33 points at 5,464. The Nasdaq up 1 point at 17,689. The FTSE 100 index here in the UK up 91 points at 8,237, despite the fact it fell back on Friday. Oils, unfortunately, were up again. Brent crude up $2.62 at $85.24, and WTI crude up $2.28 at $80.73. The dollar index also up 0.24 on the week at 105.79. It is a little disconcerting that oil prices are rising even though the US dollar is strengthening. Now, before we look at the economic data, let's break with tradition and look at gold and silver trends. Gold fell to find support at $2,300. Technical analysts believe that there is a strong floor at $2,280. Unfortunately, if this were to break to the downside, we could see gold move quite rapidly to $2,150 in a worst-case scenario. On the other hand, if gold breaks above the 2,400 level, it allows the market to go looking towards the 2,450, which is where the market had pulled back from previously. Now, the silver market showed quite a few oscillations this past week. The PMI figures, which were announced on Friday, were much larger than anticipated, and this caused traders to dump precious metals somewhat, which is why we saw such a strong fall on Friday, particularly towards the end. The consensus is that there is a strong support and buying opportunity for traders around $28.50. And should that break lower, there could be a considerable fall. However, on the upside, any break above $32 could see some FOMO action occur. That's fear of missing out. Whatever happens very short term, it should be noted that weaker housing numbers and tepid retail sales reinforces the possibility of a rate cut in September. This is bullish for silver as lower interest rates decrease the opportunity cost of holding non-yielding bullion. So, last week's data showed retail sales rise in May, though lower than anticipated, a 0.1% rise compared with forecasts of 0.2%. Weekly jobless claims were lower than the previous week, but 3,000 higher than anticipated. The stronger than expected flash PMIs did frighten the markets initially, with June figures coming in at 55.1 for services and 51.7 for manufacturing. Now this coming week, though, it's more relevant, because on Monday we have the final manufacturing PMIs, not just the flash. Tuesday, auto sales for June. Wednesday, the ADP employment report for June. And final services PMIs. Thursday is a holiday. Happy Independence Day to our US followers. And then on Friday, the US employment report for June. Please bear in mind the figures for May were 272,000 new jobs, and anything at this level or above will show that the US economy is continuing to grow and employment to rise inexorably, in fact. That will not necessarily bode well for lower interest rates. A very important week for data, and we should not be surprised if we were to see a fair amount of movement in the markets this coming week. Now, we have little doubt that there will be no interest rate cut before September, and the government's own dot plot is predicting just one rate cut this year, as opposed to the 3 most analysts were previously expecting. The reason for this is that Fed officials believe that inflation will stand at 2.6% by the end of 2024, with GDP growth of just 2.1%. That said, the dot plot also suggests that rates will fall by around 2.25% by the end of 2026, which will then bring the Fed fund rate down to 3 to 3.25%. But that is a fair way off. Our view is that a Fed funds rate of around 3% is a perfectly acceptable ongoing medium to long-term rate, and that the days of 0% interest are more than likely well and truly over. So what do we predict will happen to gold and silver this week? Well, a lot obviously depends on the figures coming out of the US against a backdrop of no rate cuts likely until at least September. Unless there are figures which throw this prediction off course, we see little to particularly excite markets, and we may very well see a month or two of consolidation, with prices operating pretty range-bound. Anything, though, that suggests a September rate cut is not going to happen will undoubtedly press hard in a downward direction on precious metals. We must also bear in mind the geopolitical issues that are occurring. Some of them seem to be easing, but there are 1 or 2 likely to pick up again. So our prediction, therefore, is that this coming week we expect gold to trade between $2,275 and $2,375, with an outlier range of $2,250 and $2,400. Silver we expect to trade broadly within $28 to $31, with $27.50 and $32 as outliers. What do you think? Please do share your thoughts. Meanwhile, thank you so much for listening. We'd appreciate it if you'd give this video a thumbs up, subscribe, press the bell sign, pop on over to Finances Do Matter and subscribe there if you haven't already done so. And as we do each and every weekend, we hope you have a peaceful, safe, enjoyable couple of days and a prosperous week ahead.